On my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Ray Dinero, and we are back at it again for another bag talk. Today we are going to be talking about bringing MSTY back into the fold. Everybody loves a good MSTY video, so I'm gonna give my take and whatnot on bringing it back in, because proper tools for the job, right? We're gonna start off with receipts as always, because we do give those over here. One of the other things that we want to do is make sure we hit the like, share, subscribe, do all the things, hype me up if you're on mobile down below, before we get started. So let's go ahead and jump right on into it. So first and foremost, we'll give the receipts. I've got my Schwab account pulled up. Obviously, as the day of recording this, the account's down a little bit, as to be expected. But over here, we're looking at our MSTY position. I've got 414 shares currently, which totals to $10,395.54. That's a fully invested share amount at this juncture. We are looking at our core workhorse positions to be around 10,000, with around 10% of our portfolio sitting in less volatile. That'll be the STRCs, the QQQYs, that type of stuff, positions. So I just wanted to show that over here. We're going to go ahead and jump into the conversation. So what did we do? We brought MSTY back in. Why? We switched out of May, which we had $10,000 in, roughly, roundabouts. MAAY from Granite Shares, which is a great paying portfolio position. But once we hit around the bottom of the market for Bitcoin, I went ahead and cycled out and started getting positioned in Bitcoin positions with growth side, upside potential. Now, MSTY was the OG for me. It was one of my starting positions. Actually, I went all in on MSTY, made a bunch of videos about being all in on MSTY before I fully understood how this space worked. And we made a lot of money, got a lot of growth, and, got out with a 20% gain. I was 20% in total profit on the position. No complaints there. We paid the taxes, kept it moving. But going into the dark, murky abyss known as the Bitcoin bear market, what have you, a downtrending market, side trending market, May was a better option. There were plenty of other better options that were not MSTY, because it took a beating. It took a beating so bad that eventually it had to reverse split. No splitting hairs on that. It was not a set and forget position. None of these high yielding positions, in my opinion, are really set and forget. You could say some of the lower volatility ones, such as your QQQYs, honestly, Chippy at this point, it could be a set and forget, but it's just so on trend that if the trend ever changes, if the narrative ever changes, it might not be a set and forget anymore. But for right now, it falls under my set and forget. I don't really have to worry about it. It grows. We've sold off, taken some profits on it, cycled that into other positions. It's been a real trooper. But MSTY, on the other hand, is a little bit controversial because people get emotional about their positions, and I am not. As a long-term holder, I am long-term holding MSTR. I have reclaimed my 10 shares initially of MSTR. I am at, well, actually, hold on. Let's go ahead and go for accuracy, right? I am currently at 15 shares of MSTR. I do like the company. I like my treasury plays. They've been doing very well. We are buying MSTR basically every 2 weeks when W2 income comes in, and I will probably be doing that more or less indefinitely. Now, if I move my primary income portfolio over to Robinhood, I'll be buying every week, period, because Robinhood gives you the ability to buy fractional shares. But that's going to be dependent on if Schwab lowers my interest rate or not. If they don't lower my interest rate, I'm moving all my money from there for that. that specific tool, because it would be better served if it's going to be the primary portfolio, better served out of the Robinhood portfolio, just saying. And I can move the way that I'm doing my finances around to where there's just going to be less money over at Schwab. It's not that I won't use them. It's just that the honkin', how do I put this? The primary account honestly would be better served over in the Robinhood portfolio, just because of the way that it's structured, the fact that it has the lowest margin interest. It for a wealth building, I kind of understand, even though it's set up very gamified, very much for the unsophisticated investor, I would say the stuff that they're building in the background is not for those people. They are building off of those people to provide tools for people like myself, people that are very future minded, very not necessarily fully 100% sold on the TradFi system, maybe working our way out, but they're giving us tools that generally you don't have access to until you're a multimillionaire and you've won the game. And in my opinion, I believe a lot of those things scale. So it piques my interest, and I can see the value in the wealth management stuff that they have, the ecosystem in itself, the fact that they have the lowest margin. For people who are fully invested and live out of their brokerage, Robinhood's a good play, in my opinion. Okay, so back to MSTY. Side rant. So we rolled back in. Once I was like, hey, we're hitting the bottom of the market, I want my upside back. There's no reason to just go pure income, because, again, we built this portfolio out. We fought through 60K Bitcoin, 40% drop Bitcoin. And we continued to get paid. We worked ourselves to where we could go fully invested during that market. And, the market's turned around a little bit for us. And we're now sitting at, 80K Bitcoin. We're 82 seems to be the ceiling right now in the channel that we're in. And, MicroStrategy is still buying. We're getting the amplification off of that. And it was time. Like, when we got down to around 60K, I started pivoting my portfolio. Like, we cycled out of May. Not that it's not a great product, not that it doesn't do its job well. It's just, if we're going to do a run, I would prefer to be in MSTY, because I know what MSTY does during a bull run. So with that said, MSTY is giving us 105% distribution rate, which, it's high, risky. A lot of volatility on MicroStrategy, a lot of options plays going on MicroStrategy. I think that MSTR is moving into a position to where they are going to nuke the shorts. They'll have the ability to do that at their behest, while still continuing to buy Bitcoin. And I want my upside. Like, we're buying MSTR, we're getting income off MSTY, which is getting me income off MSTR, the stuff that I'm long on. Overarching the core of my portfolio, the foundation of it's Bitcoin. I'm a Bitcoin holder, so this is an ecosystem that I'm familiar with. Cycling MSTY back in was not a hard decision, because I never got burned by MSTY. Again, when I cycled out of MSTY the first time, I was up 20%. So now, as we move over to Snowball Analytics, I can show you guys where we're sitting with that, because this has been in my portfolio a long time. We cycled out at 20%. We're at 30. Oh, that's MSTW. We're at 22.91% right now. Not bad. Like, I'm sitting well in the green on this position. There's nothing in here that I have to really worry about riding this cycle. Now, if we start trending back down, I might cycle back into May. That is an option. I keep tools available and readily in the purview to be able to, like, hey, we're going down sideways. Fine. I can cycle back into May, keep my profit over here in this position. I don't have to ride MSTY to zero. You don't have to ride any of these positions to zero. And that's an important thing to have in your back pocket, is using the tool for the job. This is where the work in these portfolios come from. It's going, oh, okay, we're going to jump into MSTY here at this point, and we're gonna get out. Because like, where do we get out? We got out, I think we sold the last of our MSTY in September of 25. Yeah. And we're just now getting back in. We're just now getting back in April of 26. Like, it just wasn't useful during this downtrend. We got out here. Did it have a little pop? Yeah, sure it did. But we got out on this. It shows, like, I love this chart because it shows where I bought and where I sold. Because I mean, if you're going back to 2025, like we bought, and then we made income, but like the trend was not trending in our favor. This is when we were all in on MSTY. Bought, and then we started selling. I go, okay, we're cycling out of this position. Not serving us. Then tank. Now we're buying down here. Because the market sentiment has changed, and we might have one of those booms, like, and then we'll go back to the all view, and you can see when I started buying in 2024. So this is my track record with MSTY, and we got paid big money this whole time. Then when the trend changed, I said, hey, this isn't looking good. I went ahead and jumped off. Got off the roller coaster at 20%. We had 20% total profit. I was like, you know what? It's a good time to put this tool away. But that's the reason selecting your funds is important. Cycling your funds is important. Like, I keep a tool bag of stuff that I'm interested in, stuff that's on with the current trend. Right now, what are we looking at? We're looking at Bitcoin, as always, because that's foundational peace of mind. So that's my core of competency. AI, semiconductors, data, infrastructure, and power. Those are the 5 things that I really look at, and my portfolio will be some amalgamation of those things. You could also throw in stable coins, because I am bullish stable coin companies. Like, they're basically printing money out of nothing. And even the least efficient one, Circle, is making a ton of money, and that's being inefficient at the job, like not being efficient. So those are things that are in my purview. And as we're getting into a cycle where it's like, hey, we're going to probably be trying to like make some money here. There's going to be some growth. I want my upside. The Granite shares on a bull charging market are not as useful as the covered calls that either have uncapped or limited cap upside. Like, I want the growth. Chippy being a great example of that, because it's right on trend. And like, where are we sitting with that? 36.84%. Not only that, if we look in the portfolio, Chippy is actually sitting at, let's see here, we are green as heck in that too. 32.84% over here, where they're not counting in the distributions that we get. So flat, we've got growth on this portfolio, and we've secured profit on this portfolio because we cycled it in, because I try to keep these around $10,000. And this thing has regularly just been growing and growing and growing. So I've got no complaints about those styles of positions, where we're sitting right now. I'm still stacking MSTW, and I probably will until we break this 82,000 ceiling. I'm going to try and get this to be my last fully seated position. We're going to try and get that up to, well, I've got about $2,000 to throw in here. So this will be at about $5,000. It'll be a half position of the other ones, but we'll also be looking at a point to sell that off after we get to that $5,000 position, you know, whenever we grow, we'll start chipping into this to like flow into other things. But the point being is bringing Misty back in again. Like I've rode it through a bull run. I know what that looks like. I know what it has the capability to do, and I want that uncapped upside. This isn't, again, none of my positions are set and forget, except for actually STRC and QQQY, because those are stabilizers in my portfolio. Those are positions that I kind of just throw extra cash in. If it's cash that I might liquidate to go in on a position, I have 10% of my portfolio at this point, actually a little bit over 10%, in these positions, because specifically those are things go bedlam. I need to deploy capital quickly. Like that gets eaten up first. If I were to sell down this portfolio to cover some debt, that would get eaten up first. Like that would, like if I needed to eat at this margin, I can 50% cut this margin and do a little bit more with my money by selling those off first and letting those positions do what they need to do. That's the cash pool in my portfolio. But like the Misty and stuff like that, I'm a little bit more apprehensive about, because again, I see us going up. And I am long MSTR. I am consistently buying MSTR. And so having MSTY back into the fold, I'm like, it's paying good. It's got over 100% yield right now. The distributions on it are good, solid every week. That's what this portfolio is supposed to do. It's supposed to be producing enough to manage the margin while I do what I need to do and clear the consumer debt, the high interest rate debt, bring it over into here, and which cuts the interest rate on it in half as I bring it into my financial system, as I bring it into my portfolio to pay off. And I also don't have to worry about manually paying it off because distributions are hitting it every week. So every week we're getting, I'd say at this point, around $1,000 a week that goes in, that's just chunking away at the margin. Every 2 weeks, we get an additional boost of our W-2 income, which brings the margin down for a little bit, but we're deploying that day. So next week, we get a check that will go against the margin balance. Then we immediately deploy that, which then raises our weekly income, which is consistently chipping away at the margin balance. And we are now in a space to where we're consistently doing reinvestment also, as well as buying more Bitcoin, because we're hitting over $1,000. As long as we break $1,000 a week, that means we got 10% going into reinvestment into the income portfolio itself, 10% going into the long-term holdings portfolio, and 10% going to direct Bitcoin purchase. Now, my long-term holdings portfolio is predominantly treasuries or things crypto related. So amplified Bitcoin, amplified Ethereum exposure. We don't really, I have a couple of little smaller plays that are for when SpaceX launches. We have a play in there for that. But outside of that play, we don't have anything that's not Bitcoin treasuries. So we're amplified Bitcoin as a core. And that's where we're at. So bringing Misty into the fold is not, it's just the natural flow of things. Now, do I have May on the back burner in case we start trending down or sideways, hard sideways again? Absolutely, because I will cycle those positions out. Right now, from Granite Shares, we still have Semi that's still in the portfolio. And I'm honestly considering the market that we're in, the way that things are trending, cycling that position in and of itself out. I just am not sure where I would want to put that at this point. So as soon as I find a legitimate replacement where I'm wanting to go all in on that, because like I do like the semiconductor exposure, but it's also semiconductors when they're inexpensive or we're trending sideways or down is when it performs best. And like right now, it's kind of in a space where we're a little bit nav erosion-y, and we're going to have to do some research on that. But that's where we're at. That's my conversation about Misty. I hope you guys got a lot out of it. I hope you are investing, because I mean, at this point, financial literacy, asset ownership are survival skills. AI is coming for all of our jobs. You can almost put a timer on how much time you're going to have the option to do whatever it is that you're doing that you spend a bunch of money to get a degree to do at this point, especially if you spend a bunch of money to get a degree, because somehow those people at the top are the ones getting replaced first. And if you don't own assets, like, you're not benefiting from any of this. So at minimum, I'm hoping that you're being invested and it's not all in penny stocks. I hope you have a thesis that you're following. I hope you have some sort of plan. I really genuinely hope you have a financial system which your money is flowing into versus just living off of and investing and saving what's left. I think that further on down the road, they will probably do some sort of breakdown on people like myself that have opted to just be fully invested, that figured out how to get out of the system in the last breaths of whatever system we're in, because this definitely isn't capitalism with as much involvement as the government is in the markets, and figured out how to, get out of the class that we were in into the ownership class to survive. And like what we saw that everyone else didn't, I don't know. But, it's one of those things. Like, I hope that for everybody who watches these videos, that hopefully you're getting motivated to start making some adjustments. Like, I'm not a doom and gloomer, because I'm very optimistic, because I figured out a game that I can play and win at within the system. But I hope that people understand that while everything isn't doom and gloom for everyone, it's doom and gloom for some people. And those people are the people who don't own Bitcoin and don't own assets, period. That are living hand to mouth, YOLO. Like, you're going to live a lot longer than you think. I'm proof of that. You're going to live a lot longer than you think. And there's going to be consequences for stuff that you're doing now in the future. There are also going to be rewards for stuff that you're doing now in the future. And we're going to leave it at that. It's your boy, Reckless Ray Dinero. This has been another amazing episode of Bag Talk. And until next week, I'm out. Peace.
Money on my mind. Yeah. Focus, got no time for games. Nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.